Hello everyone, good evening and welcome to this week's live weekly trade plan. My name's Tim and I'm more than happy to take you through this evening's webinar. Just to touch upon towards the end of last week, obviously we incurred some extreme weather conditions. We were actually unable to actually get ourselves to the offices on Thursday and Friday. So we definitely had an issue Thursday evening, so I hope that didn't inconvenience you too much. I believe we were just a little bit late starting that particular webinar. So hopefully we're coming out the other end of it now. We're quite happy to go and carry on as normal. So for those of you that are perhaps new to this particular webinar, and I must point out as well at this very, very early stage is that we're actually the last scheduled live weekly trade plan session is actually next Sunday, which is the 11th of March. Then what we decided to do is to go on demand with the webinar for a number of reasons. Basically, we can get the webinar done a lot earlier so that you just have more time to access it in your own at your own pace and time. So we'll make the video available much earlier in the weekend, and it's not so it's not so sort of a consideration for you on a time perspective each and every Sunday evening. The idea is anyway behind this webinar is to take a bit of stock in terms of what's happening, looking at bigger timeframes, as you all know with this webinar. So it can serve a very, very useful purpose in terms of looking for opportunities for the week ahead. And that's really what all this webinar is all about. We'll be taking a technical look at weekly and monthly timeframes, looking to identify those important highs and lows and genuine support and resistance levels. And we'll definitely be looking to try to apply those levels for the week ahead. So as always, we'll be observing our main liquid global markets, plus any other markets you would like us to look at towards the end of tonight's webinar. Okay, so if we can start, as we always do with our risk warning, please make sure you as a trader are very familiar with the risks. It is a risky environment, of course it is. We've got a very strong focus on your ability to protect your capital in a very consistent and disciplined manner. Very, very important with patience built into there as well, so you can have a comprehensive approach to risk management. And if you can protect your capital during difficult market conditions, the idea is you'll be able to make a decent return when the opportunities present themselves. Okay, so what is why do we look at multi-time frame analysis? There's a number of quite important reasons to do so. You can see more clearly what is happening and who is genuinely in control of each market. So we'll have a rundown very shortly in terms of the last week's price action. It's one of these frustrating, very sort of messy weeks, and you do get them from time to time. And we'll show you how we mitigated against any downside risk on some of the trades we were in. Unfortunately, a lot of them pulled back. Well, when I say a lot of them, I think 2 to 3 of them pulled back very, very aggressively. But I suppose that's the nature of trading the markets. All we want to really focus on primarily is making sure we don't necessarily commit any of our capital to those types of trades if things like that happen. So we needed to forego a little bit of profit on some of those trades, but we don't ordinarily get significant turnarounds like that that often, but it is an occupational hazard, of course. So seeing who's in control is quite important. The larger the time frame, the more important the genuine level of resistance, support resistance becomes. That's important to take note of. It can also show you the important levels where a market is likely to move to, especially if we can identify those weekly and monthly highs and lows. And it can assist with the identification of trend reversal as well, which is very, very important. Not only can we use multi-time frame analysis to look at higher time frames, we could also potentially look at slightly lower time frames as well and see if we get to see those trend reversals early in the slightly lower time frames. So all of these things come together very, very nicely. Okay, so let's get straight into the trading charts, and we'll start as we always do with dollar index. Now, what you'll find across the board is the vast majority of markets have been trading within a particular range now for a good few weeks. We had a very, let's say, aggressive January, and that continued into probably the first week of February, and now we've been experienced 2 to 3 weeks of kind of indecisive more range-bound markets. So that's just the way that the markets ebb and flow. What that can do is present some fantastic opportunities to us as traders when the timing is right. So this, like many other sessions, can very much be a practice of patience and trying to fine-tune that particular skill. The problem is most retail traders, they want to be trading frequently, and patience is something that a lot of traders really struggle with. However, we want to make sure we trade the kind of right setup and not necessarily trading for the sake of it, which is very easy to do. However, there's consequences to that, and it normally is not that favorable on behalf of the actual trader themselves. Okay, so just looking at the dollar index, this is a nasty kind of market, and I'll tell you why. We were quite patient with this move and bounce off the 88.13 level. Very patient from here. We identified an interesting opportunity for this market to squeeze up to this level. Now, we were very interested to see how price will behave around that 90.43 level. We've just been discussing it during the live trade room sessions, and what we found is we actually saw the close that we would be looking for ordinarily, which is a nice confirmed break above that particular high, and this market sort of expected to push up higher, at least up to the 91.42. Unfortunately, Thursday's candlestick was completely destroyed this particular setup and actually became what's called a bearish engulfing, which is actually very, very bearish in its own right. The reason for that was actually down to Donald Trump again, making the announcement with regards to the steel and aluminium tariffs, which he decided to mention, and that rattled the markets quite a lot. We saw consequences in the equity space, and also with regards to the dollar itself. So it impacted the dollar quite significantly over the last two trading days, Thursday and Friday. So actually, we had the double bottom, really nice and very easy to see. Ordinarily, we'd be looking for a confirmed break above the 90.43. And what we decided to do as a result was get into a few dollar-related trades. Now, we are still in the euro dollar, which I will share with you very shortly. But this is an inverted position of the euro dollar. So we didn't get the continuation that we would have liked to have seen or even expected for that matter. So as far as we're concerned, we have at this point no significant, I suppose, faith that this market, we would have liked to have seen continuation of that 90.43, and we didn't see it. So now we're just left with a significant question mark. We're still range bound, so we're now trading below this 90.43. So for us, we need to apply a little bit of patience, with regards to this particular price section. So that's the dollar. It's the same situation in the euro dollar. We decided to get into this trade. So as you can see, we actually wanted to sell the structural failure. Normally, when you trade these structural failures, you're talking about 7 or 8 times out of 10, you're likely to get a winning trade. When you were able to experience a winning trade for a relatively short period of time before Donald Trump made that announcement, and the dollar started to sell off sharply, as you can see. So we're actually still in this trade. We're still in it technically, although we wouldn't hold out for any. We don't have any significant faith that this level now is actually going to hold. So we'd actually expect it not to. So this will be a losing trade. It's not to say that if we went back in time and we went back 3 trading days back to next Wednesday, that we wouldn't still be a very strong seller of the euro dollar. We absolutely would. These are one of these situations where you assess your risk. You accept that risk at the point of entry, knowing that on occasion you might get a complete wipeout with that trade, meaning that the market could pull back very aggressively, very quickly, take you out, and it feels like it was a little bit of a waste of time. However, that's probably what's likely to happen. But when you get this type of setup and you get the confirmed break beneath the low, you really want to be looking for opportunities to sell this. Now, whether you get the bounce off the 120.94 level or not, that is something that would need to be discussed. But you'd certainly expect continuation down to that level the majority of the times you trade this market. So this links into our consistent approach. Obviously, we don't want to see price action like this, but it does happen. But it's still very important to not shy away from major significant structural failures. We still need to be consistent in looking to take these trades. It's just the price action didn't work with us on this particular situation. So sorry, let me go back to the dollar index. So we're going to work with the same low, which is the 88.13, but we're actually going to change the new high. So if we look at the weekly time frame, you can see how messy this price action is. However, we are going to work with the new high in this market. So I shall take this high, which is the 90.86 level, and we'll just make that change. 90.86. 90.86. So that's a new high in the weekly time frame. We'll do the same actually with the euro dollar. So let's work with the new low. We're going to continue to work with this high because it's certainly looking for the time being that we might get some continued sideways price action. A bit of choppy price action in this market, but for that reason we can work with a new low, 21.54. So we'll just change that one. 21.54, I think I said 21.54. So that's the new low. So those levels are okay. We did get the confirmed break beneath this. We didn't obviously see the explosive move that we've experienced in the dollar index and also the euro dollar. So this one is likely to roll over to the downside. We would actually like it at this point to actually push a bit higher. If it was able to push up to the 138, 139 level up here and then show signs of a reversal, it'd be much better to look to buy this market at a slightly higher price than what we're currently seeing. So again, no major change, but for consistency purposes, we would expect a little bit more consistency. That's quite interesting on a weekly chart, just to draw attention from a price action perspective. It's actually like a bit of a bull flag. So we're getting this price action from these lows. It's looking like this so far. So do we get a breakout to the upside or to the downside? We're not so sure, but we're going to mark the last week's low for sure in this market. So I'm going to take note of that. So the low is the 37.10. 37.10. So that's the new low there in the pound dollar. Moving on to the dollar yen. We now have this double bottom again. So we did see some strength come in. Ironically, it didn't close below the 105.53, which we would expect it to have done on Friday. It actually pulled back, and we're now 20 pips above that level. So not to say that this market won't continue to squeeze lower. It's very, very likely that that's the case. Let's go into the weekly time frame. So there's no doubt about it. You definitely prefer to be selling this market than looking for opportunities to buy it. So we'll work with in fact, what we can do now is we can bring this down. I'm going to work with a new low and new high. So I'm going to take note of this low, which is the 105.24. So we'll change that first, 105.24. And we'll also work with actually the high of 2 weeks ago, which is the 107.89. So let's change that quickly. 107.89. Right, so we've got new weekly highs and new weekly lows in the dollar yen. The CAD, it's kind of maintained. It just shows how messy the dollar is, because it is weakened against other countries and it is strengthened against others. So it's kind of pitched from a strength and weakness perspective in the middle, actually. So for the CAD, we've seen the explosive move to the upside. We had one eye on this significant level here, which is the 128.92. And we could see what's happening to the dollar elsewhere. So this is a trade that we were in actually back here, unless I'm mistaken. So we were we were break even at this point, and we were just around this level, around these lows. And unfortunately, the market just came back within a few pips, and as you can see, has just shot up to the upside. So that was just a bit of a shame that we kind of missed this explosive move, because we were trying to capture it. And we were very close to capturing a really good trade in this market. So looking at this on a weekly time frame, then this is what we were anticipating, was a little bit of resistance coming in at around this level. You can see these highs over here. We actually closed beneath those levels, beneath that level. However, looking at this candlestick, you'd be inclined to see continuation. If we do get continuation above these highs, we might look to get into it at this point, and actually look to somewhere around here, just above these weekly highs, to look to take this market to the upside again, especially if we get a bit of a turnaround, bit of price action in the US dollar. So that could be the first trade to take. So what we will do is we can now work with new highs, new lows. So the 29.14 to the upside. So 29.14 level to the upside, and to the downside, we are looking at a figure of 126.13. So I'm just going to change this 126.13. So that can just go there nicely. So a break above the 129.14 would constitute actually what's called a structural failure, and it would mean this market could break higher. So the euro yen, we've seen some strength come into the euro yen, and that's continued in the euro yen. Should I say in the dollar yen? Sorry, excuse me. We've seen some strength come into the yen. We've seen it in the dollar yen, and when we've now also seen it into the euro yen, even though the euro strengthened against the dollar. But you can see this. The yen strengthened significantly to the downside on Friday, and then the euro started to get significantly stronger as the day unwound. So let's have a look at this on a weekly time frame. So we're now looking at new highs and new lows. So what this signifies is a break beneath the weekly low could very well give us some very interesting opportunities to the downside for the yen, if the yen continues to strengthen the way that it has been. Now, the price action hasn't been easy with the yen, but it has been grinding lower. As you can see, we've had 5 consecutive weekly lows in a row. So we work with new highs and new lows for this weekly candlestick. So the high is 132.16. So I'll just change this one, 132.16. And to the downside, 129.54. 129.54. So that's those levels go in there. So that's the euro yen. And just finishing off with the forex pairs. This is the euro pound. And as you can see, we've now got a break of that ascending line. So this was a descending triangle with a bit of price pressure pushing lower. But as you can see, the euro really strengthened against the pound last couple of days. Now, we wouldn't have any significant hope, and we've mentioned it a few times, that a break to the upside, we've actually got these highs to reconsider. And certainly during these Brexit negotiations, which have the potential to be very, very volatile and very erratic to trade, that actually, unless we get some clear-cut opportunities that become almost no-brainer trades, we kind of want to just back off, because what we can do is we can get a nice bit of bullish price action followed by some significant selling depending on some political developments. So that's what makes this market quite difficult. What we will do is monitor it very, very closely, and if an opportunity presents itself, then we may look to take it, but we'll take that trade with all of this information in mind. Okay, so so the S&P then, moving on. Sorry, let me do the weekly levels. We're going to work within these highs and lows, as you can see. So we had a nice, really strong bullish price action. The last one was back in December, I think it was. Yeah, no, it was actually early January, so it was the 10th of January. We had a nice bullish candlestick like we've seen now. But as you can see, the following week, we had a bit of continuation followed by a little bit of selling. So are we likely to see that again? Potentially. So so we'll still work with those highs and lows. And moving on to the stock markets, you can see, and you'll see this across the others as well, we've had a poke higher. You would expect continuation from this price action to push higher, and unfortunately we didn't get that. So this is one of the trades we booked in profit on this trade. We've seen the explosive move higher, and then we've seen, unfortunately, we've experienced the significant turnaround to the downside as well. So that's the S&P. What we will do is work with the new high. So if I look at this on a weekly time frame, just messy price action to be trading. Even the week before was quite messy. So again, we're seeing a little bit of continuation. So let's take the highs, which is the 27.89. So we'll just change this level in here. So 27.89.50. But we'll definitely stick with this, the low of 4 weeks ago. Okay, so sticking with the same theme, it's a similar principle. So we're going to work with the lows, the weekly lows, and we're going to just change the weekly high. And this is more to be just consistent in our approach and making sure we're as accurate as we can, working with the correct highs and the correct lows. I'll show you something quite interesting. I'll just change this level, 25.809. So 25.809. So that's the high. Just look at the lows. So we have a low here, 24.20, and we've got 24.22.4. So there's very little difference between these two lows. We could now work with this low and see if we get. In fact, that's what I'm going to do, and I'm going to use the Dow Jones as a bit of a test case as well with this one. So the low, 24.24. So 24.24. Okay, so that's 24,204 to the downside, and if we get a break above the 25.809, could constitute an opportunity to potentially buy this market. Okay, the FTSE, we're still very much range bound, as you can see. Again, sort of quite messy price action around here, so we're not chomping at the bit to be jumping into these markets, as you can see. So we're going to work within that these levels, the highs of the 73.31, and we'll work with these lows of the 68.57. You can see it there on a weekly time frame, and again on a monthly. So that is the FTSE 100. So you'd probably be inclined to think that we're going to get continuation pushing lower. I'm just looking at some of this other weekly levels. It's quite a significant level, this. So I'm going to take the lowest point and I'm going to bring up that that low just a fraction. So let's see. But this comes with its own risk warning. So please don't trade these levels outright. You know, there's a methodology that would need to be applied in order to enter and exit these markets. So the low is the 70.24. So let's work with that level in this market as well. So the 70.24 level. So that's just these lows over here, which is just marginally beneath last week's low. So I'm quite happy to work with that level. You can see the push lower, the breakout of the top trend lines in this, and you're seeing how what becomes resistance as price is pushing higher can become support as price pushes lower, and that's what's happening, and that's why it's worth keeping these levels, because you can look for opportunities to support around these levels, which is exactly what we can see, and that's why we don't necessarily jump in on these moves, because we trade daily timeframes. We can really benefit from waiting for the market to close and see what happens to the close price, and then make our decisions. So from here, it'd probably be slightly favorable to actually be looking for opportunities to buy this market just off this current price action. However, it comes with its own risk warning. Very messy price action, not enjoyable by any stretch. We're going to work with a new high and a new low in this market as well. So we'll work with the weekly levels, and I'll zoom in a little bit more for you so you can all see it. So actually, to the upside, the high is just beneath these previous levels over here. So the 70.42 and 70.46. So we work with the higher level. So 70.46.50. So there is a level up there, and we work with weekly lows. So as you can see, we've had a large range swing to the upside, to the downside, and then back again. So that doesn't fill us with huge amount of confidence. However, the new low now is firmly beneath the ascending line. So therefore, these levels here could provide resistance, preventing prices from breaking higher. So it might provide you with a little bit of security to actually look to sell this market beneath these weekly lows. So 66.45. So let's work with that. 66.45. And that's that level in there. So we work with these highs and that low. Moving on to commodity markets. We can see that this market it's kind of been working in tandem with the US dollar as of recently. So we got a little bit of buying pressure coming in actually on Friday, as a response, I guess, to the weakening of the US dollar. So that's what we're seeing here. We're seeing a double bottom. Is this now a base for this market to push higher again? Potentially, you'd have to say purely from a price action perspective. So again, on a weekly time frame, it's not a great chart for us to be advocates of actually buying or selling. So we work with a new low of 1302. 1302. So we'll stick that level in there, and this brings us into this little particular zone around here. The 1303 is a very, very important level in the gold market, and it has been for decades. And we're at that level once more. So we do have obviously the $1,300, which can be a very significant psychological lever in this price in this particular market, and maybe on an intraday basis we can get in just marginally below the 1300 if this market starts to pushing lower. However, again, last week's price action is very it's very choppy. It's actually a slightly bearish spinning top, which just wants to it's more of a neutral position. We just have this question mark in our mind. Do we want to buy it or do we want to sell it? Well, right now, price action is telling us we're not too sure what we'd like to do with it, which is fine. You can, for any trader, They've got to make decisions whether they want to buy a market, whether they want to sell a market, or actually, which is a third option, whether they want to do nothing, because that is a viable option as well for each and every trader. So that's the new level there for the gold market. Just finishing up the commodity markets, looking at some price action, which is very choppy. This is the crude oil market. Yes, we are looking for opportunities to buy it, but we are fully aware of this kind of price action. Actually, if this market was prepared to come back further, it would be better to buy it at a much lower price. We might get a bit of a structure developing here over the next couple of days, so might be worth holding out. So we're still going to work with our weekly lows and the weekly highs. There's a $6 difference between, well, it's actually an $8 difference between the lows and the highs, but there's a bit of space within that. So we'll just work with those levels for the short term. Looking at it on a weekly time frame, what we're seeing is a significant sort of selling week. Now the close of the weekly market, just again, it just lends itself to a little bit of indecision. So let's see what this market is capable of doing, and certainly a bit of patience is just required at this point. So we're working with the highs of 66.63 and the lows of the 58.06 level. So moving on to the 10-year note, we have our lows around the $120 level, and Thursday's market, Wednesday and Thursday, it was quite bullish, certainly in price action terms, and then very, very bearish on Friday. So just to be clear, this is still a market that we definitely want to be selling. We want to look for, this is not price action that you'd actually want to be looking to buy at the moment, especially with the rising yields which they're experiencing in the US. And that is very bearish for the 10-year note, the price of the 10-year note. So, there is the fundamentals, which you can see from here, are quite conducive. We've seen a $6 sell-off, very capable of seeing multiples of that. So this might be one of these trades that we're looking to trade for a prolonged period of time. Excuse me. So you can see this price action. Let me have a look at it on a monthly time frame. So you can see that there's significant scope here. These are levels back in 2008, 2009. So you would absolutely give this opportunity to move lower. Yes, we've had a bit of a bullish start to the month, but that has quickly sold off. So maybe now we start breaking new lows and starts pushing down to the 108 level. So with that in mind, let's look at the weekly time frame. We can actually work with new lows in this market. So I'll just zoom in a little bit more. And we are currently selling this market as well. So that's worth bearing in mind. So let's take, in fact, what we can do is we can bring down these highs and lows. So I'm going to take note of the high, which is the 120.69. So 120.69, and we shall work with the lows of 119.64, which is exactly what we've got here, 119.64. So we've got new highs and new lows on a weekly chart for the 10-year note. And that just about concludes. We'll just finish off with the Eurobond. So the yields for the Eurobond are much lower than it is in the US. However, they are increasing. So we are still likely to get continuation to the downside eventually. We're obviously experiencing this little bit of a pullback opportunity. So we'll continue to work with the lows. What we will do is change the highs. So let's look at this on a weekly time frame. So that's an indecision candlestick, and it's a clear-cut one as well. So let me zoom in a little bit more. So you can see that price is struggling to push higher. and this is a weekly time frame. So a break beneath the low would constitute an opportunity to sell it at least down to 157, maybe even more. So if you get a good opportunity, good entry for this market, it might be a significant opportunity to sell it. Okay, so let's work with a new high. So 160.20, 160.20. So that's in there now. I'm going to work with a new low in this market as well, because I think there can be an opportunity to sell this market at a much higher price. So let's work with the low of the 159.02. So 159.02 to the downside. 02. So we have a new high and a new low on a weekly time frame in the Eurobond. Okay, so that just about concludes then tonight's live trade room. If you do have any questions of any kind, don't hesitate to use your chat box, and I'll be more than happy to answer them for you whenever you need. Sorry, let me just get up my other screen. If it'll come back to me, there it is. Good stuff. So look, you're very welcome to follow us on our public Facebook page. Details are there up on screen, and also on Twitter and LinkedIn. And any questions, don't hesitate to post them in the chat box. I'll be more than happy to answer any questions that you might have. If there's anything that I've discussed that you're not sure about, or you need a bit more clarity, then don't hesitate to post it into your chat box. Or if you'd prefer, you can email us at support@TheLiveTradeRoom.com. And don't forget, these webinars are all about your continued education. So that's what's really important to us. So there's no silly questions or anything like that. Please do ask whatever questions you would need. And if you do have any markets for us to look at, quite happy to look at. We've got a bit of time if you would like to look at any specific markets of your choosing. My pleasure, guys. Listen, thanks very much as usual. And to just remind you all again, we will be, this particular webinar will be going on demand each weekend. So we'll record it live. We'll do the webinar live, but what it means is it gives you more freedom to access it at a time that's better for you. So we'll actually get it recorded a lot earlier, and we'll post it. We'll send out some information to you all about it very, very shortly. So next Sunday is going to be the last live weekly trade plan session, where you don't have to be bound by this 8 p.m. to 9 p.m. time frame. We know it's good for some of you, it's not so good for others. So what we'll do is we'll record it live each and every weekend. We'll post it into your members area, and you can access it whenever you are available. And don't forget, you can always drop us emails if there's things you need clarifying. So on that note, guys, it just seems like most of you are fairly comfortable with what we've covered. I don't think there's any questions coming in. My pleasure. Have a great weekend. Hope you survived the bad weather, because it was pretty awful. There was snow blizzards and everything. So it was great for the kids, but bit of a nightmare for the adults on and off. But no, it was a good experience. It was good fun, but it was just a shame. We were struggling to get to the office and things like that. So yeah, that's the usual. So look, on that note, guys, I'm quite happy to let you guys go for the evening. So thanks for joining us. Do take care. And to let you know, obviously, this will be recorded and placed into your members login area. So look, do take care. Enjoy the rest of the weekend, and we are very hopeful that we should be back to full strength tomorrow as normal. So from everyone here, take care and bye for now.